Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about Bitcoin. Not much has changed during the charts since the weekend, of course, because it is Monday morning here. But I want to start by pointing out a few things. Look, they printed $8 trillion, gave people a $1,400 stimulus check, and then sent the rest to their friends and left us all with inflation. And I watched The Big Short last night. I don't know if you've seen it. I would recommend going back to watch it because there are some echoes, I feel, with The Big Short and the current situation. At least here in the UK, the housing market is in a bit of a state. We've got 1.2 million UK households, which is 4% of all UK households, are going to run out of savings completely because of the higher mortgage repayments. And this 4% of UK households is going to become completely insolvent by the end of the year. The Bank of England, unlike the Fed, is on a relentless hiking cycle. Whilst the Fed has paused, the Bank of England is talking about a terminal rate of 7%. What's really worrying about the 7% terminal rate is at 7%, 75% of buy-to-let mortgage holders, i.e. landlords, will become insolvent because the rent that they are able to charge will be below that of the interest payments on the buy-to-let mortgages. And so just like in the film The Big Short, just like in 2008 when we had the subprime mortgage crisis trigger a massive decline in the global economy, the stock markets, the bond markets, in everything, and millions of people lost their houses, there are some echoes, there is some rhyming today with what is going on in The Big Short. So I'd recommend going and watch that film. In other news, Brazil's central bank has added a crypto exchange, Mercado Bitcoin, to CBDC pilot. So we're seeing the CBDCs really start to accelerate. And we're just about a week away from July, of course. And we know what's launching in the start of July, and that is the Fed Now service, the Fed's CBDC. Now, it's not a true CBDC because it's not based on a blockchain system, but it is a CBDC if you frame it in terms of a central bank digital control. It has all of the nasty capabilities that a CBDC has, despite not actually being a blockchain-based cryptocurrency. So the walls are kind of closing in, so to speak, in terms of these CBDCs. The CBDCs are on their way. They are closer than ever before. And whilst nobody really wants the CBDCs, I think it's safe to say at this point they are coming and people are going to want an exit from the system. We have BlackRock's CEO coming out and telling us that Bitcoin could evolve into a global market. I think there's no doubt in my mind at this point that we will see Bitcoin become a true global asset class, multiple trillions of dollars. And of course, therein lies the opportunity going forward. Root here is asking what happened after the third halving. And you can see here, this is in orange, the available supply for trade. Well, around this time, around the third halving, most people in the Bitcoin space worked out that this asset class wasn't going anywhere. Most people in the Bitcoin space worked out that they wanted to put some of this away for the long term. And the reason we're seeing this decline is because people don't want to sell. People are taking Bitcoin, they are cold storing it, they are pulling it off of exchanges, making it unavailable as part of the tradable supply. And this is likely a trend that's going to continue. Remember, the longer Bitcoin is still here, the longer the price continues to go up, the less incentive there are for people to sell their Bitcoin. The more incentivized people are to just stack Bitcoin, put it on a cold wallet, and hold it for the long term as their exit to this CBDC system, which, like I said earlier, is closer than ever before. Since the lows in October, Bitcoin continues to be the fastest horse in white at the top. Exponential age stocks continue to be following closely behind, with the Nasdaq in green closely behind that. So this continues to be a story of Bitcoin continuing to smoke other asset classes, to smoke every other asset class, and big tech is the only thing that's keeping up even closely. So having seen the CPI peak come in, having talked about this Goldilocks zone, this pendulum effect, where we have high inflation on one side and deflation on the other, when the pendulum swings and we come down from a highly inflationary environment on our way to deflation, there's this period in the middle, remember, the Goldilocks zone, where things look okay. From in this Goldilocks zone, we're able to say that inflation is coming down. So far, we've avoided a hard landing and a soft landing. Maybe we're going to swerve a recession. Rate hikes are close to being over, if not over already. And we continue to be in this Goldilocks zone where things don't look so bad, right? This concept, coupled with the fact that liquidity continues to increase, has enabled the stock market to do well, and as you can see from this chart here, it's expected to continue to do well for some time to come. CPI, the inflation metric, continues to come down, and we can expect this to come sub 2% by the end of this year. The issue is that we are likely heading for a period of outright price deflation ahead of the next inflationary episode. So again, if I redraw my pendulum right, we have inflation, remember, at this end, and we have deflation at the other end. Right now, we're somewhere in this Goldilocks zone in the middle, but once the pendulum is set in motion, it will complete its swing. And what lies on the other side is deflation. And if I hop into my melt-up chart, you can see I've been calling for this big blow-off top as the pendulum swings from right to left. And then once we get past the midpoint, we should be on our way to deflation. And this is what makes me think we're going to see an enormous deflationary bust in the not too distant future. That's not to say I don't think we go higher in the near term. I do think there's more highs left in this rally, but make no mistake about it, there's a good reason this arrow has been pointing down after the top. And that is because once the pendulum is set in motion, we will see it continue to swing towards deflation. And I believe this is what is going to cause the crash in the markets that is to follow after we set new all-time highs. Of course, once the pendulum makes it all the way up to deflation and we've had the big bust, the cycle starts all over again. The Fed will move to massive quantities of quantitative easing, that is to say massive amounts of printing of money, and we will start to swing from deflation back to high inflationary environments. And of course, lastly to note, as we swing into a high inflationary environment, risk assets such as Bitcoin and tech stocks usually thrive and outperform once more. CPI shelter, which is in blue here, lags massively, but this is just about to roll over, as you can see from this chart. And once this does, remember, it makes up 35% of the CPI basket. So we really are going to start to accelerate towards that deflationary side of the pendulum swing. We really are going to start to see not only shelter come off, but like I said, because this makes up 35% of the CPI basket, inflation is going to come down massively. And despite this being the case, every man and his dog is still short equities. This continues to be the world's most hated, least understood, most shortest rally in history. There is still plenty of capitulation left to happen from the bears flipping to the bulls as we finally get up towards the all-time high. This is unfortunately the fate that most investors suffer. They are short at the bottom and they flip long at the top. If you look at the hard right edge of this chart, you can see we are nowhere near in the euphoric bullish phase of the market yet. So in the short term, if you've been watching the weekend's video, you already know this. We are on our way to some cycle lows for the equity markets. The Nasdaq has entered overbought territory versus global liquidity conditions and is likely due for a correction at some point. I think that correction has already started, as I showed you over the weekend. But the crucial point to understand is that liquidity will continue to rise. Sorry to beat the same drum over and over and over again on this channel, but that's what we do here. We ring the alarm bell and we say liquidity is going to continue to increase, and all the time liquidity continues to increase, we will see higher numbers in the Nasdaq and in Bitcoin. So until something changes, we will continue to trade this market as if it is entirely liquidity driven, because of course it is entirely liquidity driven. In white here, you've got the weekly global liquidity index still continuing to rise. We also have the financial conditions index, which is a 5-month lead, still continuing to rise. All of this speaks to keeping an open mind about better than expected outcomes walking forward. And so to finish where we started off, Bitcoin up 85%. Bitcoin continues to smoke every other asset class. Exponential age stocks and big tech, i.e. the Nasdaq, continue to follow closely behind. And this is a trend I expect to continue, at least in the short term. So it looks like the S&P 500 is still going to be working its way down into that cycle low this week. All I really want to do is see if we can get into the timing window, form a swing, and then go again. I'm not currently long the VIX, but I'm just about to add a long. I think the long is going to look something like this for me. So finally, the VIX is potentially going to spike. I'm going to keep a close eye on this, but expect me to tell you I've gone long the VIX. Tesla looks like it's going to gap down a little bit today and follow this squiggle. So again, patience into the end of the week, patience so we can find those cycle lows, and I think we can go again. As ever, watching Apple, I don't want to see it lose the uptrend, but so far, still healthy. I am currently still holding a gold short. We'll see if it can change direction. We'll see if it can buck this trend, but I actually wouldn't be surprised to see it sort of get rejected somewhere in here and then roll over one final time. Of course, for silver, that would look something like this. So that wouldn't surprise me, but one day at a time as ever. Bitcoin kind of hanging around, kind of getting a bull flag. Let's move this fractal out of the way. So I wonder, are we going to bull flag here? Are we going to have to draw a trend line and buy the break? Or is this going to form some sort of much deeper correction into that end of the month timing band for the cycle low and then go? This, of course, would be my preferred look. Will we get it, won't we? That is to be determined. So overall, I think things look okay. A little bit of patience into the end of the week, find the cycle lows, and then I think it's time to go. The bigger picture, as I showed you, is that inflation continues to come down. We continue to be in this Goldilocks zone. We have not yet started to move towards deflation. So there is still time for the market to rally. There is still liquidity increasing, which should also fuel upside. There are still plenty of bears and shorts out there who have not yet been forced into the market at the top. So that also should provide fuel to the upside. As ever, I'll be back tomorrow to go over any updates in the charts and progress that we've made. But I think this week is going to be kind of a chill week. I think we're going to be slowly just relaxing, staying patient, staying ready to strike when we get into the timing band for the cycle lows. And then I think we've got a good chance at rallying to all-time highs. If we really are going to put in a blow-off top, then you would expect this final portion of the rally to be the most violent. So very quick gains are potentially to be made here. But as ever, one day at a time, we'll worry about that when we get there. For now, the focus is entirely on, let's see if we can get some pullbacks, let's see if we can get some dips, and then we'll look for confirmation of a reversal to get long and see what the market can give. In the meantime, happy Monday. I hope you enjoy your week. Take care from me. All the best. Cheers. Bye.